Welcome back to the Deep Dive. It is Wednesday, February 4th, 2026. And I have to be honest with you, looking at the stack of sources, reports, and just panic-induced market analysis on the desk this morning, it feels like the future didn't just knock on the door. It feels like the future kicked the door down, raided the fridge, and told us to get out of the house.
That is a very vivid and honestly a pretty accurate way to describe the last 48 hours.
Yeah.
Usually when we sit down to do this, we are looking at iterative changes. Interest rates tick up a quarter point or a new iPhone comes out with a slightly better camera. But today is, well, it's different.
It feels heavy. It really does. We aren't talking about tweaks to the economy. We are looking at a fundamental restructuring of reality.
We are. We absolutely are. If you look at the headlines we're about to unpack, they all point to one thing: a massive bifurcation, a split. We are seeing a violent separation between the physical world, the things you can touch, the energy you can burn, the biology you can alter, and the digital middleman economy that we've spent the last 20 years building.
And the market is absolutely freaking out about it. I mean, truly. We have future shock everywhere. We have rockets, we have biological hacking, and we have a software crash that is wiping out billions of dollars in hours.
If you are listening to this and feeling a little whiplash, you are not alone. The investors on Wall Street are feeling it too. The sources we have today are heavy on chaos, but our job, I think, is to find the signal in that noise.
Okay, so let's map this out. We have three main pillars to get through, and each one of them could probably be its own episode, but we're going to try to weave them together. First, the headline that is blotting out the sun, literally and figuratively: Elon Musk.
The Musk mega merger.
SpaceX and XAI are combining in a deal that sounds like it was written by a sci-fi author on a, I don't know, caffeine bender, and he's calling it the sentient sun. He wants to build data centers in orbit.
It sounds insane. I mean, completely insane. Until you look at the physics, which we will do, the markets are treating this as a $1.25 trillion reality.
$1 trillion. Okay, we'll get to that. Then, pillar number 2. And this is the one that might hurt some portfolios today. The SaaSpocalypse.
I love that term, grim as it is. It's so descriptive.
It's a bloodbath. Software stocks are tanking, and it's all seemingly triggered by one company, Anthropic, releasing one new tool. Just one.
It's the difference between a tool and a carpenter, and we'll definitely get into that. It's a fundamental shift.
And finally, pillar number 3, the body and belly economy. We have Eli Lilly hitting a $1 trillion valuation on weight loss, while Chipotle is hitting a wall. It's a weird world where we're optimizing our biology and cutting back on our burritos.
It's all connected. It really is. The mission today is to connect these dots. We are witnessing the death of the middle. Value is moving to the extremes. Massive physical infrastructure in space and biology on one end, and God-tier AI on the other. Everything in between. It's in the kill zone.
All right, let's not delay. Let's start with the biggest story on the planet, or rather, off the planet. Section 1, the Musk mega merger. SpaceX has acquired XAI, so Musk is buying Musk.
In a deal that consolidates the two most ambitious private companies in history into a single entity, it's unprecedented.
Let's look at the numbers because they are just eye-watering. The combined entity is valued at approximately $1.25 trillion. That is a T.
Just to put that in perspective for everyone, that is larger than the GDP of most countries. We're talking more than Switzerland, more than Saudi Arabia. It's just a number that's hard to even wrap your head around.
And the share price for this new behemoth is set at, what, $527 a share?
$527 a share. And this isn't just some random shuffle of assets, a bit of corporate accounting. This is happening in a very specific context.
Right, the IPO context. That's the key here.
Exactly. SpaceX has been teasing a public offering for years, and the street has been betting on June 2026. This merger is the final act of housekeeping before they ring the bell. It's a way to consolidate the portfolio, to tell one single cohesive story to investors.
So if I was an investor in XAI, let's say I was lucky enough to get into that Series B round, what happens to me now? Do I own a rocket company all of a sudden?
You do. Congratulations, you own a rocket company. The exchange details are fascinating. XAI investors are getting 0.1433 shares of SpaceX for every XAI share they hold. Or, and this is the interesting part, if they want to cash out, which I cannot imagine many will, they have an option for $75.46 per share in cash.
Why would you take the cash when you can own a piece of the sentient sun? Seems crazy. But let's get to the why, because on the surface, this looks like a conglomerate mess. You have a rocket company that bends metal and burns methane, and you have an AI company that writes code and burns GPU cycles, Why put them together? It seems on its face illogical.
It comes down to one word, one single 5-letter word.
Energy.
Energy. We have hit a wall, a hard wall. We've been talking about the AI power crunch for 2 years now. Data centers in Virginia are waiting 5 years for grid hookups. The grid simply cannot handle the demand. Musk's statement in the press release was blunt, bordering on apocalyptic regarding the energy grid.
I have the quote right here. He said, global electricity demand for AI simply cannot be met with terrestrial solutions.
Terrestrial solutions. That is the key phrase. He's saying Earth is tapped out, the planet is at capacity.
He goes on to say that harnessing even a millionth of the sun's energy to reach superintelligence requires moving resource-intensive efforts off-planet.
Okay, this is where we need to stop and really look at the scale he's talking about. A millionth of the sun's energy sounds small, right? It sounds like a crumb.
Sounds like a rounding error. It sounds like nothing.
A millionth of the sun's output is vastly, unbelievably more energy than human civilization has consumed in its entire history combined. He is talking about a scale of compute that is literally impossible on the surface of the Earth. You couldn't do it without boiling the oceans.
So the vision, this grand sci-fi vision of the sentient sun, is to move the brain of humanity into orbit.
Exactly. He wants to extend the light of consciousness to the stars, which is very poetic, very grand. But the engineering logic behind the poetry is brutal and, well, kind of makes sense when you look at the constraints.
Okay, so let's unpack that engineering logic, the how. Because I'm looking at this FCC filing and my jaw is on the floor. SpaceX has filed to launch up to 1 million solar-powered satellites engineered as orbital data centers.
1 million. Just say that number again. A million.
Wait, hold on. Let's get some context here. We have, what, 6,000 or 7,000 Starlink satellites up there now, and people are already complaining about light pollution and traffic management in orbit. You're telling me he wants to put 1 million servers in the sky?
That is the filing. Now look, regulatory filings are often wish lists. They're aspirational, but it shows the architecture. It shows the scale of the ambition. These aren't just internet relays anymore. These are floating server racks.
But why? I get the solar power thing. The sun shines 247 in space, no clouds, no nighttime. But is that alone enough to justify the insane cost of a rocket launch for every single server rack?
It's not just the power generation. That's only half the equation. It's the cooling. This is the part that people always forget about data centers. They're not just computers. They're giant refrigerators. If you run a data center in Ashburn, Virginia, or anywhere else, 40% to 50% of your electricity bill is just air conditioning. You are fighting a constant losing battle with thermodynamics to keep those NVIDIA chips from melting into slag.
Right. It's a massive heat problem.
A massive heat problem. In space, you have the perfect solution right outside the chassis, the cold, hard vacuum of the void. They plan to use radiative cooling to dump waste heat directly into the universe.
So you're saying free power from the sun and free cooling from the vacuum of space.
Exactly. The operational costs, once the hardware is up there, drop to near zero. Musk estimates this could add 100 gigawatts of AI compute capacity annually without costing a dime in terrestrial electricity bills. That's a game changer.
But there's another layer here, isn't there? I saw a note about speed. It's not just about power. I saw a note here about optical links.
This is the vacuum speed limit, and this is crucial. It's a really subtle but incredibly important point. On Earth, we move data through fiber optic cables. Those cables are made of glass. And light, travels about 31% slower through glass than it does through a vacuum.
31% slower. I didn't realize it was that much.
It's a huge penalty. So if you are training a massive AI model that spans thousands of GPUs, that latency, that tiny delay adds up. It becomes a huge bottleneck. In space, using laser intersatellite links, data moves at the absolute speed of causality. Musk calls it the optical mesh. It is, by definition, the fastest possible network in the known universe.
So let me get this straight. You have the fastest possible network, you have unlimited solar power, and you have unlimited cooling. It sounds perfect. It sounds like the ultimate cheat code for building AI.
On paper, it is perfect. It's an engineer's dream.
But we don't live on paper, do we? We live in a world where things break. And I have to play the skeptic here because this whole thing sounds incredibly fragile.
It is incredibly risky. The risks are as astronomical as the ambition.
I'm thinking about maintenance. In a normal data center, if a server rack goes down, a guy named Dave walks over with a screwdriver and swaps a board.
Right? Good old Dave, the unsung hero of the cloud.
You can't send Dave to low Earth orbit. There is no Dave.
No, and that's a huge problem. If a satellite server fails, it stays failed. It becomes a piece of very expensive, very fast-moving space junk. That means the reliability of these components, the mean time between failures, has to be orders of magnitude higher than terrestrial hardware. And that is expensive.
And what about the environment up there? It's not exactly a clean room.
Radiation, that is the killer. Cosmic rays, solar flares. They flip bits in computer memory all the time. On Earth, our atmosphere and magnetic field protect us. In orbit, those ships are getting bombarded constantly. Shielding them is possible, but shielding is heavy. And heavy means expensive to launch. Every gram costs a fortune.
And then there's the debris issue. You mentioned 1 million satellites. That number is just, it's sticking with me. Experts are screaming about Kessler syndrome.
The cascading collision nightmare. It's the stuff of sci-fi horror. If one of these hits a piece of old debris and shatters, it creates a cloud of shrapnel. That shrapnel then hits other satellites, which shatter and create more shrapnel, a chain reaction. Putting 1 million heavy objects in orbit, we are flirting with locking ourselves out of space for 1,000 years if this goes wrong.
It seems like a massive gamble, like bet the species level gambling.
That is the Musk playbook, isn't it? Go big or go home. But there is also a financial cynicism here that we should acknowledge, a more down-to-earth explanation.
You mean the corporate piggy banking theory?
Exactly. Look at the balance sheets. SpaceX is a cash cow. It has a near monopoly on launch. It prints money. It's incredibly profitable. XAI. It is a cash incinerator. It is burning billions and billions of dollars to buy chips from NVIDIA.
So by merging them.
You use the reliable rocket profits to subsidize the speculative AI losses. You stabilize the XAI investors who might be getting a little nervous about the burn rate by giving them equity in the profitable rocket company. It's a way to bail out the AI bet without ever having to admit it needs a bailout.
It's vertical integration on steroids. The innovation engine, as they call it. You have the brain, which is XAI, the lift, SpaceX, the nervous system, Starlink, and the body, which is Tesla.
Don't forget the Tesla piece. It's so important. Tesla invested $2 billion into XAI. The vision is that the orbital data centers train the superbrain, and then that intelligence is beamed down via Starlink into the Tesla Optimus robots and the self-driving cars.
A closed loop. A completely self-contained ecosystem.
A closed loop of physical AI. From silicon brain in orbit to robot muscle on the ground.
It is breathtakingly ambitious. But while Musk is looking at the stars, trying to build a new economy in the vacuum of space, down here on Earth, the old economy, the one we're used to, is getting absolutely slaughtered.
And that brings us to section 2, the SaaSpocalypse.
I have to say, the mood in the financial reports this morning is grim. It's bleak. We are seeing a sell-off in software stocks that traders are calling a bloodbath. What on earth happened?
The trigger was Friday. Anthropic, they released a new update.
Just an update. That's it. Usually updates mean bug fixes and performance improvements.
Well, this was a bit more than that. They launched plugins for their Claude Cowork agent, and we need to be very, very clear about what this does. This isn't just a chatbot where you type, write me a poem about my cat. This is an agent, a worker. It automates complex, multi-step tasks across legal, sales, marketing, and data analysis.
Okay, give me a concrete example. Walk me through it.
Okay. Think about what a junior associate at a law firm does, or what you use a service like LegalZoom for. You need a contract, maybe an NDA. In the old world, and by old world I mean the world of last week, you would log into LegalZoom. You'd pay a subscription, you'd fill out a bunch of forms, and the software would generate a templated document.
Right. That's software as a service. SaaS, I pay for the tool.
The Anthropic agent changes the paradigm completely. You don't log into a tool, you just tell the agent in plain English, read this entire email chain with our new partner, draft a standard Delaware LLC operating agreement that reflects the terms we discussed, and send it to their legal team for signature.
And it does it. The whole thing.
That does it. It plugs into your email, it understands the context, it generates the custom legal document, it handles the logic, it does the work.
So I don't need the LegalZoom subscription anymore.
You don't need the hammer because you just hired a carpenter who brings his own tools. That is a fundamental shift. SaaS was about renting tools. AI agents are about commissioning outcomes. And if I can get the outcome without paying for the tool is suddenly worthless.
And the market saw this and just panicked. Let's look at the carnage because it's stunning.
Let's start with the most obvious one. LegalZoom, ticker LZ, down nearly 20% in a single session.
20%. Wiped out. That is a crash.
Thomson Reuters, TRI. Now, they are a giant, a behemoth. They own the news, but they also own massive legal and tax software suites like Westlaw. They plunged 16%.
CS Disco. They do legal discovery tech, right?
Right.
Sifting through documents.
Sank 12% because the agent can just sift through the documents for you.
I was even surprised to see the London Stock Exchange Group take such a big hit. Why them?
Down 13%. It's because they're heavily exposed to data analytics platforms. They sell those expensive terminals and software subscriptions to analyze market data. But if an agent can just scrape and analyze the public data for you, why pay thousands a month for the terminal?
There's one analyst quote here that really stuck with me. It just jumped off the page. They said, "The sector isn't just guilty until proven innocent, but is now being sentenced before trial."
That captures the sentiment perfectly. It's not about what has happened, it's about what could happen. The market is pricing in the potential extinction of the seat-based subscription model. Investors are terrified that companies, the clients, are going to cancel their Salesforce seats, cancel their Adobe seats, cancel their LegalZoom subscriptions, and just run open source agents in-house for a fraction of the cost.
And this isn't just a Wall Street problem. This is a global problem. And this is where it gets really scary for the workforce. Let's look at India.
Oh, the India story is the canary in the coal mine for the global services industry. The Nifty IT index dropped nearly 6%. That is the worst single day since May of 2022.
And these are huge, huge companies. Infosys, TCS, Wipro.
Persistent Systems down 7%, Infosys down 5.8%, TCS down 5.2%. These companies are the back offices of the world. They employ millions of people.
So why are they getting hit so hard by this?
Think about their entire business model. For decades, it's been labor arbitrage. You take a business process like processing insurance claims, or writing basic website code, or doing data entry, and you send it to a place where labor is cheaper. You hire humans to do the grunt work.
But if the AI agent can do the grunt work...
You don't need the humans. You move from labor arbitrage to intelligence arbitrage.
Fine.
Why pay a team of 25 people in Bangalore to write basic JavaScript when Claude Cowork can do it instantly for a fraction of a cent?
So the middleman isn't just a piece of software. The middleman is also the entry-level human worker.
Exactly. The entire global outsourcing model is under existential threat. We saw it in Japan too. NEC, Fujitsu, Nomura Research, all down between 8% and 11%. It is a global repricing of what we call process work.
It feels like the safe zone is shrinking so fast. You know, for years we were told, learn to code. Now coding is being automated. We used to say, build a SaaS company. Now SaaS is being eaten.
The kill zone is expanding. If your business model can be described as, I sit between the problem and the solution, and I charge a fee for passage, you are in trouble.
So where's the safety? If software is dying, who is living? Where's the value moving?
This brings us to Section 3, the AI divide. Because while the software application layer is burning to the ground, the companies building the fundamental infrastructure are printing money.
Big tech earnings. It's a real tale of two cities.
Let's start with Alphabet Google. They report tonight after the bell.
Expectations are sky high. The street is looking for revenue to climb 15% to $111.4 billion.
But peel back the onion. Look at the cloud number. That's the important one. Google Cloud revenue is expected to rise 35% to $16.2 billion. That's where the growth is.
So why is Google seemingly immune to this SaaSpocalypse? They sell software too.
Because they aren't just selling software. They are what analysts are now calling a full-stack AI provider. This is a key distinction. Google designs its own custom AI chips, the TPUs. They own the data centers. They own the foundational models, like Gemini. And now, in a major strategic shift, they're selling those custom chips directly to external customers.
So they are the factory. They own the means of production.
They are the factory, the mine, and the store. They are selling the shovel, the pickaxe, and the gold. They win at every level of the stack.
Now, contrast that with Microsoft. They took a pretty big tumble last week.
A 10% drop. And the reason was so telling. Their cloud sales growth, Azure, it slowed just slightly. But their capital spending, the money they are pouring into buying chips from NVIDIA, was astronomical.
So investors are looking at that and asking, where is the return on that investment?
Exactly. Microsoft is more exposed to the software application side of things. They need you to buy Copilot subscriptions for $30 a month. If people are becoming hesitant to buy any subscriptions because agents are getting cheaper, Microsoft feels that pain directly. Google, by selling the raw compute itself, is in a much safer position.
Speaking of selling compute, we have to talk about the king. NVIDIA.
NVIDIA is interesting right now. The stock was actually down slightly today, about 2.8%, just sort of caught in the broader tech gloom. But the underlying news is massive. They are nearing a deal to invest $20 billion into OpenAI.
$20
Right.
Billion. That's not an investment. That's a marriage.
It's a deeply strategic defensive move. NVIDIA wants to ensure that the smartest AI in the world, which is arguably OpenAI, is permanently wedded to NVIDIA hardware. It's a way to lock out competitors and ensure their GPUs remain the standard.
And the competitors are definitely feeling it. I mean, look at AMD today.
Oof, AMD sank over 8%, a really rough day for them.
Why, though? I thought the conventional wisdom was everyone needs chips. A rising tide lifts all boats.
They do, but it's a winner-take-most market. It's a power law distribution. If you are a company spending $10 billion on a new AI data center, do you want to risk buying the second best chip? No. You buy the best. You buy NVIDIA. AMD's sales outlook was a little weak, and the market is punishing them brutally for not being number one.
There was one other hardware winner that really jumped out at me from the logs. Supermicro, SMCI.
Up 11%. A huge green candle on a very red day.
Why are they popping when almost everything else is dropping? What's their angle?
They are the integrator. They are the ones who do the hard physical work. They take the NVIDIA and AMD chips, they buy the motherboards, the power supplies, they design the racks, they engineer the complex liquid cooling systems, and they ship the finished servers fast. They raise their revenue forecast significantly. It's more proof that the demand for physical infrastructure, the actual metal boxes, is just insatiable.
So again, we see the pattern. It's becoming crystal clear. If you build the physical thing like a Supermicro server or the fundamental component like an NVIDIA or Google chip, you win. If you sell a subscription to a website like LegalZoom, you lose.
That is the dividing line of 2026. Physicality versus abstraction.
All right, let's pivot. We've talked about space, we've talked about code. Now let's talk about flesh and blood. Section 4, the health, lifestyle, and real-world economy.
The body and belly economy.
This is where things get really personal for a lot of people. Let's start with the body. Eli Lilly.
The new king of pharma, an absolute juggernaut. They are forecasting 2026 profit above Wall Street estimates, and they just hit a milestone that is it's incredible. They are the first pharmaceutical company to reach a $1 trillion valuation.
$1 trillion. That puts them in the same club as Apple, Microsoft, Google, and it's all because of one thing.
Obesity. Surging, unstoppable demand for their drug Zepbound. But the real news driving the stock, the thing that has investors so excited, isn't just the injections, it's the oral pill.
The pill. That's the holy grail, isn't it?
It is. They are on track to launch an oral weight loss pill later this year. This solves the biggest friction point for adoption. People hate needles. And, maybe more importantly, the manufacturing for pills is vastly easier to scale than the sterile injectable pens.
So this is a supply chain victory as much as a scientific one.
It's a massive supply chain victory, and you can see that when you look at the contrast with their main rival, Novo Nordisk, the makers of Ozempic and Wegovy, they are down 15% today.
15%. Why such a big drop?
They warned of unprecedented price pressures from competitors and regulators, and they're forecasting a steep sales drop. They are losing the supply chain war. Lilly is winning the scale war. The market has decided Lilly owns the future of human metabolism.
Okay, so we have a population that is increasingly medicated to suppress appetite. What does that do to the belly economy? Let's look at Chipotle.
CMG, down 5% today.
And the details in their report are worse than the headline number. Same-store sales fell 1.7% last year.
And their outlook, their guidance for 2026, is for flat sales.
Flat sales for Chipotle. I remember when they were the unstoppable growth story, growing double digits every single quarter.
The CEO is using that classic corporate speak, blaming a dynamic consumer backdrop. But we have to read between the lines here. We have to connect the dots.
Is this the Ozempic effect we've been talking about? Is it finally showing up in the data?
It has to be part of it. We've been speculating for years that if 10% or 15% of the wealthy and middle-class population starts taking GLP-1 drugs, overall calorie consumption has to drop. It's simple math.
I mean, I feel this anecdotally. I walked past a Chipotle yesterday, and usually that's an automatic stop for me. But if you're just not hungry...
That burrito looks less like lunch and more like a chore. The biological shift is hitting the bottom line. It's not just that people are broke, it's that people are chemically altered to not want the product anymore.
But people are also broke. Or at least they're being much more careful with their money. Just look at Uber.
Uber missed profit estimates. ETS was 71 cents versus the 79 cents the street expected.
But their trip volume was way up, right?
Yeah.
22%. People are taking more rides.
More rides, less margin. Consumers are trading down. They are choosing Uber Share and UberX over the more premium options. They are willing to sit next to a stranger to save $4 on their ride to the airport.
So Uber is intentionally moderating their margin growth to keep prices low and affordable.
They have to. They are fighting for market share in a cash-strapped world. It's a volume game right now. And it's interesting, their CFO, Prashanth Mahendra-Raja, is stepping down amidst this strategic shift. But you have to look at their long-term play.
Robotaxis. It's always robotaxis.
Always. They made a point to highlight their deepening partnerships with Waymo and Lucid. Uber knows that the only way to permanently fix their margin problem is to remove the single biggest cost from the equation, the driver.
Again, remove the human.
Remove the human from the loop. It's the recurring theme of the day.
Before we leave the real-world sector, there was one surprising bright spot in the energy space. Enphase.
Enphase Energy soared 20% today, a monster move.
A 20% pop on a day like today is incredible.
They beat profit and revenue estimates. And this ties right back to the Musk story we started with. Solar demand is resilient. It's robust. Whether it's for residential rooftops to gain energy independence or for powering these massive new AI data clusters, the world is desperately hungry for electrons.
So if you are making energy, you are winning. If you are selling calories, you are losing.
That sums up the physical economy right now pretty well.
All right, let's zoom out to the global picture for a minute.
Yeah.
Section 5, global financials and crypto, because it's not just the U.S. reacting to all this.
And there's a really interesting counter-narrative happening in Brazil, of all places.
The Ibovespa index hit an all-time high, 186,000 points.
While the U.S. tech sector is hyperventilating and having a collective panic attack, Brazil is partying.
Why? What's driving that?
It's the old economy revenge. It's a flight to tangible assets. Brazil is a commodity superpower. We're talking oil, iron ore, soybeans, meat. In a world that is suddenly terrified of digital bubbles and abstract software value, investors are fleeing to real stuff you can drop on your foot.
Plus, the interest rate environment there is favorable.
Right. They are expecting a 0.5 percentage point cut from their central bank in March. Inflation is finally cooling. It's a classic emerging market rally fueled by commodities and loosening financial conditions.
But then there is the asset that is supposed to be digital gold, the new tangible crypto.
The crypto crash, it's been ugly.
Bitcoin drifted below $76,000 today. It is down about 40% from the all-time high back in October.
It's a brutal, painful correction for a lot of people.
And the timing is so ironic, isn't it? We have Donald Trump back in the White House. He was supposed to be the crypto president.
Everyone in the space thought November 2024 was the starting gun for the golden age of crypto. The regulatory environment was supposed to be perfect.
So why the extreme fear?
Because market physics beats politics every time. We have a situation that Michael Burry is warning about.
The big short guy. He's always the life of the party, isn't he?
He's warning about a deleveraging death spiral. Think about how this works. Massive amounts of Bitcoin were bought on leverage or are held on corporate treasuries, like MicroStrategy used to do. When the price drops, the value of that collateral drops.
Which triggers margin calls from the lenders.
Which forces those entities to sell their Bitcoin to raise cash to meet the margin call, which of course drives the price down further, which triggers more margin calls from other leveraged players.
A self-reinforcing downward loop.
Exactly. A feedback loop from hell. It doesn't matter who is in the White House if the fundamental leverage structure of the market collapses. The market is flushing out all of that excess.
So let's try to tie this all together. Let's synthesize all of this. We've covered orbital data centers, crashing software stocks, revolutionary weight loss pills, and Brazilian commodities. Section 6, outro. What is the big picture here? What's the thread that connects all these disparate stories?
The picture is the disappearance of the middle.
The middle. Explain that.
Look at where the money is flowing. Look at where the value is accruing. It is flowing to the absolute extremes of the economy. On one side, you have the massive physical infrastructure, the things you can kick. The atoms.
That's the SpaceX rockets building orbital servers. Eli Lilly building drug manufacturing plants. Enphase building solar panels. Brazil digging iron ore out of the ground.
Right. The base layer of reality, the physical world. And on the other extreme side, you have the god-tier AI, the bits.
Google DeepMind, XAI, OpenAI, the systems that do the actual high-level thinking.
And what is disappearing, what's being hollowed out, is everything that used to sit in between those two poles. The kill zone is the intermediary layer. The software companies that used to say, we'll help you navigate the complexity of this. The LegalZooms, the IT service firms in India, even the junior lawyers and entry-level coders.
The AI doesn't need help navigating the complexity anymore. The AI just does it.
Precisely. We used to think software was the ultimate safe haven. Mark Andreessen famously said, software is eating the world.
And now?
Now AI is eating software.
And the physical world, the world of atoms, is the only place left to hide.
Or to build the future.
I want to leave the listener with a final thought, something to chew on as we wrap up. We started this whole deep dive with Musk's sentient son.
Yes.
If that actually happens, if he or someone like him succeeds in moving the bulk of humanity's data processing and intelligence to orbit, think about what that does to the architecture of our civilization.
It raises a profound, almost philosophical question.
If the brain of humanity, the collective intelligence, the training runs, the knowledge moves to the sky, and the muscle of the economy, the manufacturing, the driving, the logistics, becomes automated on the ground by robots and agents.
What is left for the economy on the surface? What is left for us to do?
Are we just the consumers? The beneficiaries of this automated abundance? Or worse, are we becoming the dumb terminals?
We might be. In that future, we become the endpoints, the biological sensors. We are the inputs for a vast silicon intelligence that lives in the cold vacuum of space. We are the roots of the tree, but the flower, the consciousness, is up there among the stars.
That is both awe-inspiring and absolutely terrifying at the same time.
That's the future, isn't it? It's never just one or the other. It's always both.
Well, on that cheerful note, we hope this deep dive helped you make some sense of the chaos of February 4th, 2026.
Indeed. It was a lot to get through.
Thanks for diving deep with us. Keep your eyes on the stars, and maybe go double-check those SaaS subscriptions to see if you really need them anymore.
Couldn't hurt to take a look.
See you next time.